All right, for his perspective on U.S. markets, we're joined by David Nelson, Chief Strategist with Bell Point Asset Management. David, great to have you back on the show.
Thanks for having me back, Michelle.
Lot of stuff happening today in the world. One, like, where do we begin?
Well, certainly geopolitical. Some of the news that you were, talking to your viewers about. Investors have been, bouncing around like ping pong balls, depending on the news that's hit. Last night after the president's speech, when he announced that we were sending warplanes in Iraq, futures were down pretty sharply, and Wall Street was bracing for a really tough morning.
Right.
And then things started to stabilize, and then there was a report. It was unconfirmed, but it seems to have been confirmed tonight by the BBC that Samantha Powers had made a very stern warning in the UN Security Council that the U.S. would view any incursion into the Ukraine by Russia, whether it was humanitarian or not, as an invasion. And then later on this afternoon, we also heard that Russia had pulled back and said that they were announcing that their exercise was over. The market seemed to take that in, rejoice. We were pretty oversold, so we had a pretty good day.
Okay, a lot of stuff going on. We'll start off with Russia.
Sure.
So Russia seemingly ending some of its military exercises on the border with Ukraine. That has also been reported by Russia's own state news agency, Interfax. But at the same time this week, we had President Putin carrying on with these tit-for-tat sanctions, telling the US and the EU, you're putting sanctions on me, well, guess what? I'm going to ban a lot of food imports from your countries. Why has the market not freaked out at that?
Well, we did at first. I mean, it was a pretty rough week for a while. We managed to recover and close positive on the week. But you're bringing up a really important point. Normally, geopolitical events and even military events, you have to ask yourself, what does this mean for the securities that I own? And often it means nothing. But this is trade sanctions.
Surely that there are U.S. companies that will be affected by this. Which ones in particular?
There was one mentioned today. Actually, Boeing was in the journal today that now some of their supplies for titanium, which they use in their undercarriage and for their wheelbase, they're going to lose some of that supply, and they're going to have to depend on other manufacturers. So it's all interconnected.
What about
it's not
some of
good
the
news.
food companies? Are there any particular companies whose equities we should maybe consider shorting, i.e.,
I don't know
against?
if I would. It's tough shorting on these kind of short transient events. I would caution investors not to do that because they can disappear as fast as they appear. I can't give you one offhand, but I'm sure there are a lot of food companies that would be affected by this.
Okay, well, now we had today the news that President Obama is launching these airstrikes into Iraq, but investors either dismissed it or seemed to like it. Were you surprised that the markets closed up today?
At first I was, and then I thought about it. And these rumors have been circulating for days, and maybe it provided some certainty for investors. We know that we're doing something. I guess what we'll have to watch is what's the mission creep like? Does this start to morph into something more than just a humanitarian effort? I think it will, because we have some Americans there, and it'll be pretty easy to say that we're going in to protect American lives there, because we have some there.
All right, beyond the geopolitical events, let's focus a little bit on the economy. And some analysts are saying we're at that Goldilocks spot. Not too hot, not too cold, roundabout, just right. What do you think?
I'd like that, yeah.
Do you feel that we're at the sweet Goldilocks spot right now?
I think the economy is okay. We had a nice GDP figure for the second quarter, a big snapback coming out of a negative first quarter. By and large, the earnings for the second quarter were good. The median was about 10%. Earnings growth, about half that for revenue.
And it was a significant earnings season because previous ones, we managed to see companies beat estimates on the bottom line, but we didn't see much top line growth.
The top line growth, that's really important because the top line growth was a positive surprise, and I thought that was excellent. What concerns me, and I have a concern, the concern is, you mentioned it just earlier, the strength in U.S. Treasuries. Now, some of it is a safe haven trade, but I'm concerned that maybe the Treasuries are seeing something else. I'm on record saying...
So explain why this is usually a concern for equity markets.
Well, it depends on why interest rates are going down. But if they're going down because of a short-term geopolitical concern, we'll deal with that. But a lot of times, Treasuries could be going down because it's spelling out something negative for the economy. And I've actually been on record saying that the Fed is going to raise rates in the first quarter.
First quarter?
First quarter, but the bond market is obviously saying that I'm wrong.
You mean they're saying that it's going to raise rates before?
No, they're saying that the rates are coming, a rate hike is coming much later. If I was right, and I think I eventually will be, rates would probably be going up right now. I expect it to happen, and frankly, if rates aren't rising next year, then there's something wrong with the bull thesis of this market.
So, third quarter GDP, very quickly, what is your forecast given all of these factors? And
Gosh,
how would that impact the markets?
I don't know if I have a number. It certainly won't be a 4% GDP. But I think, coming into the start of the year, we were all looking for 3. The first quarter took that out of the equation. But now after this strong second quarter, if we can have a decent third and a decent fourth, we might get to 3 by the end of the year.
All right. We'll be watching that closely. As always, thank you so much for your insight and expertise.
Thanks for having me, Michelle.
David Nelson, Chief Strategist with Bell Point Asset Management.